Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Welcome to the U.S. Markets Wrap with me, Ryan Huang. We've got U.S. stocks resuming their steep pullback as the latest concessions from the White House on President Donald Trump's controversial tariff policies failed to calm rattled investors. So the Dow Jones Industrial Average dropped 1%, around 428 points lower to 42,579. The S&P 500 lost 1.8% to 5,738, and the Nasdaq Composite was the biggest loser, down 2.6%, officially closing in on correction territory. And this is where we've now got Frank Cappelleri, founder and president of financial research firm CappThesis, to walk us through the latest market action. Frank, thanks for joining us on the show today. How are you doing?
Hi, Ryan. Very good, thanks. Another tough day on Wall Street.
Another tough day indeed. Walk us through what's happening here. It's been a bit of a back and forth week so far.
It has, and when you have a lot of back and forth big days, whether they're declines or advances, just means it's a very treacherous trading environment. So as your viewers probably know by now, the S&P 500 has had 6 consecutive days of 1% moves, 4 of them to the downside, 2 to the upside. And so that just makes it very difficult to trust any move one way or the other. And this is the type of environment that is difficult to find, bullish stock patterns with, which is a complete difference to what's happened over the last 2 years. And I think it's something that we have to pay close attention to going forward.
Yeah, so we've got a couple of things playing out. Of course, the tariffs in the middle of what's been driving the market action. What is going to be the outlook for the coming weeks as we navigate these waters?
Well, I think there's one thing that we know is going to happen is that the headlines are not going to stop. And so I think when you have different iterations and different people, interpreting what's going to occur over the next few weeks, it becomes challenging to understand what's real and what's just chatter. And I think we see this playing out in the market every day. So at the very least, I think we have to put blinders onto the headlines and just pay attention to what the price action is telling us. And right now, it obviously shows confusion. How that could change going forward is that we need to see some sort of support established, and maybe today was getting close to the 200-day moving average once again and holding. That could be a start, but we need to see some upside follow through next.
All right, let's take a look at the levels. So what are you looking out for when it comes to the support and resistance?
Well, I think a very key area is going to be, say, around 5,700, 5,650 or so. And we're getting close to that now because that is a spot where, again, the 200-day moving averages, but more importantly, it's an area where the S&P 500 broke out from back in September. That was a breakout zone. That was a former high from the summertime as well. And that's not too far away at this point. So in terms of, expecting some real corrective action, we've gotten it at this point. So I think, the trick is going to be what's going to entice buyers to step in, because they've been used to being rewarded after just very small dips. Now you're getting close to almost a, correction depending on where you look. So, going back over the last 2 years, this type of, pullback was a very good buying opportunity. So I think we have to see if that plays out again now.
Yeah, talk about buying opportunities. What's looking attractive to you right now? And what comes to mind is the crypto summit that Donald Trump is going to be hosting tonight. Is that something to look for this year as we see a lot of tailwinds for cryptocurrencies?
I believe so. And again, Bitcoin, just to focus on that, of course, has been oscillating around 90,000 level. And that is very clear in the chart. That is really the line in the sand, if you will, in terms of if this is going to go considerably higher or break down and fill the low back down to, say, 70,000 or so. So I think that's one thing. And it's very important, I think, today to see it, really Bitcoin hanging in there for the most part compared to other areas. And you can put Apple in there as well as Alphabet. So two of the bigger names, of course, in the Mag 7 that have done relatively okay over the last, say, 2 weeks or so. So that's some indication that there's at least some buying interest, either, within technology, even though some of the high-flying, high-beta names got hit a lot harder.
All right, so for buying interest, let's move on to the other end of the spectrum when it comes to the US dollar, which has been under some pressure lately. Looking at it on the month, it's down some 3.5% on the dollar index. Walk us through what's driving the action here and what's going to be playing out in the coming year.
Depending on who you talk to, tariffs could be deflationary, and when that's the case, then you have the dollar moving lower. Now, it's kind of a quick move recently. When the dollar move was 1% on a single day, it's a big move. When it did that almost 3 days in a row, so on over a 3-day basis, down 3%. We hadn't seen that since right around 2022, top of the dollar. If you go back to all the other times over the last few years when the dollar's moved at least 3% in 3 days, it's marked key bottoms for the S&P 500. So that has not yet to be reflected, of course, in the market itself, but we've seen it, as you know, do very well for many other foreign markets, especially Europe. And especially the ETFs that we looked at are priced in U.S. dollars have just been making new all-time highs. So I think that's a very, key point. We know that international markets compared to the U.S. have been doing much better. And from my perspective, I think that performance discrepancy has gotten a little bit too wide at this point. So I expect some sort of snapback in that. Now, that would probably be a combination of U.S. markets bouncing a little bit and seeing some of the air come out of the performance bubble in some of the foreign markets, at least on a short-term basis.
All right, another area we're looking at quite closely these days is what's playing out in AI, and we've been seeing some momentum in the past few months. Right now, it seems to be a bit of a pullback of sorts as we see some rotation to other sectors. How are you reading into this move?
I think that this is just a normal reaction in terms of seeing how far some of the names have gotten. Now, again, on the downside, it's tough to pinpoint a spot where we'll see demand come back in, but I think it was some sort of a bubble, right, to that extent. But then, today with Broadcom reporting well and being rewarded in the post market, the hope from that angle is maybe some of that demand is not fully gone at this point, and you can see some of that flowing to other areas, in the coming days. But I think when you have a market like this, when so many of those stocks went really parabolic, the corrective action is sometimes harsh, but from that point, then the hope is that a new foundation from a higher level can be built to go on. And I think if that starts to happen, then it will show maybe we're in the second stage of the market accepting AI, as a long-term investment theme.
Things not always in a straight line, and of course, lots to watch out for in the coming year. Helping us to navigate what to look out for has been Frank Cappelleri. He's the founder and president of financial research firm CappThesis. Frank, thanks as always for your time and insights.
Thanks, Ryan. I appreciate it. Have a good day.
Great chatting with you, Frank. Catch up with you again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.